A job advertisement, timesheet, payslip, and bank notification can all display different numbers without any of them being contradictory. They answer different questions. The timesheet records paid time. A pay rate converts that time into gross pay. A payslip then lists deductions. Net pay is the amount left after those deductions, and that is the figure that can match the bank deposit. Confusing these stages can make a correct payslip look mysterious. Imagine Noor completing a fictional month of event support work in August. Her record contains 6 time blocks of 26 paid hours, making 156 paid hours in total. Her fictional hourly rate is AED 50. The example also contains AED 600 labeled pension, AED 150 labeled insurance, and AED 50 labeled other deduction. These names and amounts are invented only to show how payslip arithmetic is organized. They do not describe any employer, country, law, or personal situation. Start with the time grid. 6 blocks, each mark 26 hours, fill until the display reaches 156 paid hours. This first scene establishes the quantity of paid time. It does not yet show what reaches Noor's bank account. Hours are an input to gross pay, not a promise that every amount calculated from them remains after the payslip is completed. The rate multiplier supplies the next relationship. 156 hours multiplied by AED 50 per hour equals AED 7,800. That AED 7,800 is gross pay in this fictional example. Gross means the pay amount before the 3 listed deductions are removed. It is useful for checking whether paid time and the stated rate produce the amount shown on the payslip. The August payslip document brings those fields together. It shows the pay period, paid hours, hourly rate, and gross pay on one page. Reading the labels matters as much as reading the numbers. AED 7,800 beside gross pay does not mean AED 7,800 must appear in the bank. It means the time and rate calculation has reached its pre-deduction total. Now the deduction pockets open below gross pay. AED 600 moves toward the pension pocket, AED 150 toward insurance, and AED 50 toward the other deduction pocket. The arrows describe amounts taken from gross pay in this classroom example. They do not explain why a real deduction exists or whether it is correct. A real reader would need the actual payslip labels and applicable rules for that separate question. The deduction ring answers a simpler arithmetic question: what is the combined amount? AED 600 plus AED 150 plus AED 50 equals AED 800. The 3 colors remain separate around one total, so the category detail is not lost when the sum is calculated. A total without the itemized lines would be harder to audit, while itemized lines without a total would hide the next subtraction. Net pay follows from one subtraction. AED 7,800 gross pay minus AED 800 total deductions equals AED 7,000 net pay. The order is visible: first calculate gross from paid time and rate, then total the listed deductions, then subtract that total. Net pay is not another rate and it is not an extra charge. It is the remainder after the displayed deduction lines. A stacked tower reconciles the whole payslip. The green net pay section is AED 7,000 and the orange deduction section is AED 800. Together they rebuild the blue gross pay label of AED 7,800. This is a useful consistency check. The parts after classification should add back to the starting gross figure. If they do not, a missing line, adjustment, or reading error may need investigation. The final bridge connects the payslip to the bank record. The payslip card says net pay AED 7,000. The bank card says deposit AED 7,000. An arrow links equal amounts. The scene supports a narrow claim: these 2 figures match in Noor's fictional example. It does not claim every real bank deposit always equals one payslip line, because timing, reversals, multiple payments, or corrections can create different records. The complete reading path is therefore time, rate, gross, itemized deductions, total deductions, net, and bank deposit. Each label has one job. Gross pay describes earnings before the displayed deductions. Net pay describes the remainder after them. The bank deposit confirms what arrived, not what was earned before deductions. Keeping those labels separate turns 4 apparently different numbers into one traceable story. This example is educational only, not financial advice. It is not payroll, tax, employment, legal, pension, insurance, or personalized guidance. Real payslips and deductions depend on actual contracts, records, benefit plans, and local requirements, so any real discrepancy should be checked against the original documents and an appropriate qualified source.